Did you know that a multi-trillion-dollar opportunity will cause Tesla stock to soar? While bears think a Tesla stock surge is highly unlikely, some disagree. To learn more, keep watching and paying attention. Tesla is frequently in the center of a debate. Issues, even the smallest ones, almost always get out of hand. This is not to imply that all Tesla news is uninteresting, especially when well-known people are involved. You will learn today why this multi-trillion-dollar opportunity will cause Tesla stock to soar. According to Adam Jonas, a Morgan Stanley analyst, Tesla is prepared to join a number of markets with a combined market value of trillions of dollars. As Jonas once said, think of the EV race as a marathon. At mile 21, Tesla is in the lead. Everyone else is still lacing their shoes or has reached mile 2. The development of Tesla from an electric car firm to one that focuses more on infrastructure transportation, according to Jonas, is essential to understanding its potential worth. This research note was issued a few years ago. Within Tesla's ecosystem, Jonas recognized a number of potential markets, including, but not limited to, a $10 trillion light vehicle, mobility, a $1 trillion industry, logistics, a $2 to $3 trillion energy storage market, and a possibly multi-trillion-dollar market based on content delivery and data monetization from the 600 billion hours Tesla customers spend in their vehicles. Jonas said that, although it is challenging to quantify, Tesla's data may be one of its most valuable assets. According to Jonas, one of Tesla's most valuable assets is its captive ecosystem of data-gathering transportation devices that are in close proximity to data that might be used for a variety of adjacent reasons, such as monetization or the widening of the strategic moat. Jonas claimed that any advancements in electric vehicle technology provide Tesla a competitive edge in autonomous vehicle technology and a prospective car-sharing market, but advancements in autonomous vehicle technology can still benefit electric vehicles and car-sharing, although Jonas, who is a Tesla bull for good reasons, acknowledges that there are risks involved. He also believes that Tesla's autopilot system may provide consumers with tantalizing levels of safety. Musk has spoken about the Tesla network car-sharing business, on which Jonas is basing part of his investment thesis. According to what Jonas wrote, lawmakers are paying close attention to the alarming rise in traffic fatalities on American roadways based on our conversations with automakers and regulators. He continued by saying that Tesla wants to build human-driven vehicles that are 10 times safer than the majority of vehicles on the road today. In our judgment, anything even remotely comparable to this order of magnitude of safety improvement might increase market awareness of Tesla's technology and the need to replace and upgrade the current stock of used cars, both in the financial and consumer sectors. Jonas, do you believe that Tesla and its shares have a multi-trillion-dollar opportunity as a result of the aforementioned research note? If the whole auto industry switches to electric vehicles, please share your thoughts in the section below. EVs might most likely have a significant impact on the redesign of the transportation sector's use of renewable energy. The next battery technology and the materials used to make it are the best way to benefit from the multi-trillion-dollar energy transitions, since many people think that batteries will soon power the entire planet. Profitable Momentum Bloomberg estimates that investments in the global energy transition reached a record $501.3 billion in 2020, and that a revolution-worthy amount of money is pouring into new energy. Furthermore, organizations, charities, and endowments with assets totaling over $14 trillion are prepared to fund an energy transition. It is referred to as a paradigm shift by Forbes. This is a substantial chunk of money, and investors have some concerns about legacy automakers because they have a sizable sector centered on internal combustion engine automobiles. With this enormous effort, legacy automakers are aiming to please both internal combustion engines and electric automobiles. They only have room for one client, and if it's not an electric vehicle, they'll fail. According to Morgan Stanley, many experts and analysts agree that Tesla is the leading EV firm in the market on its own. Both over- and undervalued Tesla. They think Tesla is pricey as a firm that only makes cars, but that it may be significantly undervalued as a provider of onshore infrastructure for renewable energy. They consider Tesla to be the best capital expenditure for batteries. According to Morgan Stanley, 2 significant occurrences will reward energy innovation. In the current environment, conflict and inflation, the narrative surrounding what Tesla does, the markets it serves, its growth profile, and the global strategic ramifications of the ecosystem on which it stands, we believe, will change significantly over the course of the next 6 months. A growing number of investors are also starting to recognize the advantages of Tesla's direct-to-consumer business model, which legacy automakers are unable to implement because of strict state dealer franchise regulations. Rather, it eliminates the intermediary and lessens political gamesmanship, enabling the brand to effectively serve its customers. Morgan Stanley thinks that as globalization advances into a new period characterized by growing national security concerns, the multi-decade dollar battery capex cycle is being pushed by bigger factors. Investors should keep in mind that battery storage, infrastructure, and new energy sources will be crucial in the future, and Tesla is well positioned to take the lead. Elon Musk, the CEO of Tesla, has previously stated that the company will likely create its own mining operations, either by purchasing existing mining companies or starting its own from scratch. As a result, Tesla will be able to make more batteries than anyone else. Questions were quick to fly around after Tesla's market value exceeded $1 trillion last year. Only Apple had previously accomplished this milestone. Microsoft, although the electric vehicle leader eclipsed a market capitalization north of $1 trillion at the end of 2021, it now carries a market value of about $84 billion thanks to a $4 billion deal to sell 100,000 vehicles to Hertz, a rental car company. However, it is important to note that Elon Musk lead Tesla is in a different industry entirely from the aforementioned giant corporations. After the market closed on July 20, Tesla released its second quarter earnings, and while growth wasn't quite perfect, it was in line with expectations. Tesla's adjusted earnings per share surged 56.6% to 2.27, easily exceeding expectations by 27. Revenue increased by 41.6% year over year to $16.9 billion, matching Wall Street predictions. Production and deliveries both saw year-over-year increases of 25.3% and 26.5%, respectively, but quarter-over-quarter declines of 15.3% and 17.9%. The COVID-related stoppage in its Shanghai factory and persistent supply chain constraints, which have been hurting the global economy for quite some time now despite existing problems, were blamed for the decline in production and deliveries compared to the first quarter. For the entire fiscal year, Wall Street analysts predict that Tesla's top and bottom lines would increase by 57.4% and 74.2%, respectively. Considering that Tesla still has a few supply chain and production difficulties to resolve, those growth rates are excellent, according to statistics from SB. Assuming an EBITDA margin of 25%, market intelligence experts forecast that the EV frontrunner will earn $164 billion in total sales by 2025, representing a 5-year CAGR of 25.4% from last year's revenue, and translating to an annual EBITDA of $41 billion. By 2025, the company's enterprise value would increase by 175% from its current enterprise value of roughly $829 billion at an enterprise value to EBITDA multiple of 151.3, which is Tesla's 5-year average, to $2.3 trillion at an enterprise value to EBITDA multiple of 55.6, where Tesla trades currently. If the corporation achieves an EBITDA of $41 billion by fiscal 2025, its enterprise value will increase to $6.2 trillion. Given that its growth would probably slow down over the next several years, it is not quite conceivable that the EV company will trade at such a high multiple in those years. However, a more conservative multiple of 25, which is still greater than the S&P 500's average multiple of 17.1, would result in an estimated enterprise value of $1 trillion, which is just 23.7% higher than the company's current worth. For more of this information, go to Tesla stock and view our other videos.